Hello students. In this session we will discuss the third head of income from business and profession. We have already discussed income from salaries, which was the first head of income. Also we have discussed income from house property, the second head of income. Now out of the 5 heads of income to calculate the gross total income, the third head is income from business and profession. What do you mean by income from business and profession? This means any income shown in profit and loss account after taking into account all the allowed expenditures by an assessee. So, this means whatever are allowed expenditures by an assessee, they will be shown in P&L account, and whatever income is left after that, that will be the income from business and profession. This income earned by the assessee from the previous year will be taxable, and an assessee involved in the business and profession should file his or her income on or before 31st July of an assessment year. So, these are the basic rules to be included in business and profession regarding our incomes of an assessee. Now, the format for calculation of this income from business and profession. There are 2 formats. The first one is when the assessee is keeping books of accounts on mercantile system of accounting. For this, the format is as shown to you. It will start with net profit as per profit and loss account. We will add disallowed expenses if they were already debited in P&L account. We will also add incomes taxable under this head but not credited in P&L account earlier. So these 2 items will be added back in the net profit as per P&L account. From this amount, we will deduct allowed expenses if they were not debited earlier in P&L account, and we will add incomes not taxable under this head but credited to P&L account. So this will give us income taxable from business and profession. Later in this session, we will discuss what are the expenses which are disallowed, what are the incomes taxable under this head, what are the allowed expenses, and what are income not taxable under this head. So these 4 items we will discuss in detail also. Next format is if the assessee is keeping books of accounts on cash system of recording. In this, receipts from profession taxable under this head will be taken, and from those receipts all allowable expenses paid will be deducted, and this will give us income taxable from business and profession. So we will follow any of these 2 formats to calculate the income from business and profession of an assessee for the previous year. Now, the list for clearly disallowed expenses. The following expenses which I am discussing now are disallowed expenses. They are clearly disallowed. That means there is no condition attached to these. If any payment is made to self, for example proprietor salary, interest on capital, drawings, etc., they will be disallowed. Payment to relatives or friends without any reason, or transfer to any reserves or provisions, payment of direct taxes like income tax, etc., all capital expenses, all personal or household expenditures, any loss on sale of assets will be disallowed expense. So these will be added back in net profit as per P&L account when first format is followed. Also, any donations and charities, gifts and presents, goodwill written off, contribution to an approved retirement fund, compensation paid for not doing any activity, rural development expenses, expenses regarding incomes not taxable under this head will also be disallowed. Besides these, any payment made out of India without deducting tax at source will be disallowed. Legal expenses paid for breach of law or any kind of payment made to political party will also be disallowed. Penalty or any interest or fine on income tax and expenses incurred for corporate social responsibility other than that of section 30 to 36 will also be clearly disallowed. So all these items are clearly disallowed expenses, and those expenses which are not in this list are allowed, or they are disallowed with some condition. So that we will discuss now. Now, disallowed expenses with condition. The list which is shown to you is the list which are allowable expenses, but they will be disallowed if they are unpaid till the date of filing income tax return by the assessee. These expenses includes any interest on loan payable to public financial institution, state financial corporation, state industrial finance corporations, etc. Any interest on loan taken from scheduled bank or cooperative bank, payment of leave encashment to employees, bonus and commission payable to employees, sales tax, excise duty or customs duty paid, contribution as an employer to PF or gratuity fund or superannuation fund, and any sum payable by the assessee to the Indian Railways for the use of railway assets will also be disallowed, but with the condition that if they are unpaid till the date of filing the return. Now we will discuss incomes which are taxable under this head, and if these incomes were not included in P&L account, we will add them. These incomes are business profit, compensation received on termination of agency, income from trade association, profit on sale of export license, cash assistance or subsidy against exports under any scheme of Indian government. So if any subsidy is received against exports by the Indian government, that will be income taxable under this head. Any amount received under specified agreement for not carrying out any business or not sharing any know-how, patent, copyright, etc., that will also be considered as income under the head in business and profession. Receipts from house property lent out to own staff. If assessee is receiving any amount from the own staff for letting out the house property, this will be considered as income under the head business and profession, and it will not be considered as income from house property. Any amount received under keyman insurance policy will also be income taxable under this head, and profit from speculation business is also income from business and profession. This completes our list of incomes allowable. Now, lastly, we will discuss partly allowed or disallowed expenses. So, now these expenses are disallowed or they are partly allowed. So, we will discuss each one of them with their condition attached. First is expenses incurred for acquisition of patent, copyright, technical know-how, etc. This deduction will not be allowed in assessment year 13, 14 and subsequent years, and before that this was allowable in 14 equal installments. So now for assessment year 2021 this will not be allowed. Next is payment for acquiring the license to operate telecommunication services. This expense is equally allowed for the number of years of license acquired. So if the license is acquired for 5 years, these will be deductible 1/5 every year for 5 years. If the license is acquired for 10 years, these will be equally deductible for 10 years, that is 1/10. Next is preliminary expenses. Preliminary expenses are 5% of total cost of fixed assets. Whichever is less, that amount will be allowable equally in first 5 years. So that means either preliminary expenses or 5% of total cost of fixed assets. Whichever is less, the amount will be allowable 1/5 in each previous year. Fourth one is expenses incurred for exploring and locating minerals. If incurred, these will be allowed equally in first 10 years, but this deduction cannot exceed the amount of income from mines for that year. So 1/10 of the total expenditure will be allowed in every previous year, But if in any year, in any previous year, amount of income is more than that, then it will not be deductible after that amount. Maximum limit is the amount of income from mines. In this, a point to be noted is, if these expenses were incurred before 31st March 2006, they were equally allowable in first 5 years, and now they are allowed in first 10 years. Last one, in the category of partly allowed or disallowed expenses, this amount paid to employee on voluntary retirement, and this amount will be equally deductible in first 5 years. So if any amount is paid to the employee by the employer on his voluntary retirement, the amount will be equally deductible in first 5 years. This is also partly allowed. With this, we come to the end of this class. I hope these concepts are clear to you. Thank you and have a nice day.